All right, boys, this is day 5, I'm pretty sure, of the bootcamp, The Path to Profitability, where I teach you all my concepts and my strategy so you can become profitable and start printing just like me. So let's get straight into it, right? Today we're going to be talking about time frame alignment and why it's important, okay? So time frames, right? Let me just get it out. As you can see, there's a lot of time frames up here, right? We have the 30-second, the 1 minute, the 2 minute, 3 minute, 5 minute, 15, 30, hour, 4-hour, daily, and weekly, right? And why are these important, right? So each time frame tells you how long it takes a candle to form and close, all right? So each candle, right now we're on the 15-minute chart, takes 15 minutes to open and close, right? Like right here, you can see on the right side, it's counting down 5 minutes, So it takes 15 minutes to form each candle. And as you can go down to the 1 minute, you see even more candles, right? Because it takes 1 minute, like it's counting down here from 60, right? So that's the time frame, right? Same for the 2 minute, 3 minute, 5 minute, 15 minute, 30 minute, and so on, right? So that's basically the time frames. But now I'm going to tell you how to actually use these time frames to your advantage, all right? So why are they actually important? Well, they are very important pretty much for the fact that you need to align different time frames together. So these are the basic time frame alignments, all right? So we have the 4-hour aligns with the 15-minute, okay? We have the 1 hour aligns with the 5 minute, and then we have the 15-minute aligns with the 1 minute, 15-minute / 1 minute, or / 5 minute, I'm saying. Aligns with the 1 minute, okay? The 1 minute time frame is pretty much where you're going to take all your trades. It depends though, because my strategy teaches you take the highest time frame inversion of the leg. That's the PB Blake model. That's the way I'm going to teach it as well, okay? So you're going to take the highest time frame inversion. So that could be anywhere up to 1 minute to 5 minutes worth of a time frame, right? So we can take it from 30 seconds to 5 minutes, right? But the time frame alignments are going to be these. The 15-minute, 5 minute is going to align with the 1 minute. The hourly is going to align with the 5 minute. The 4 hour is going to align with the 15-minute, okay? Those are the times you're going to trade. So if you're trading on the 5 minute time frame, you're going to look at the hourly for your bias, right? If you're going to look at the 4-hour time frame, you're going to look to enter on the 15-minute, right? So what do I do to find my bias, right? We'll get into how I find my bias, but I always start on the daily time frame. Daily time frame, right? So the higher time frames, right? So higher time frames give you the bias of the day. So the higher time frames, what do? They give you the bias of the day. Where is price going to go for the day? That is what we use the higher time frames for. That's what I use the higher time frames for. That's what countless people use the higher time frames for. So what are these higher time frames? It's going to be the daily, the 4-hour, the 1 hour, the 15-minute, and sometimes, I can actually spell, sometimes the 5 minute, right? 1 day, 4 hour, did I say 2 hour? Are you serious? Oh my gosh. Bear with me. 1 hour, all right? So we have the daily, 4-hour, 1 hour, 15-minute, and sometimes the 5 minute to find your directional bias of the day, right? We also have entries. So entries are going to be on we got the 5 minute to 1 minute, all right? Possibly the 30-second time frame, but it depends. It depends. Possibly the 30-second, but it depends, okay? Why does it depend? Because sometimes with the 30-second, you see so many candles that it's it's easy to confuse you with, right? So if you see an inversion on the 30-second and you're like, okay, this is a banger, I'm going to catch a crazy RR, it might actually not hit just because you are not aligning your time frames, right? So what I usually do every day is I start and work my way down. So I start with the daily, work my way down all the way to the 1 minute, possibly 30-second based on the day, right? All the way down. So daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, 3 minute, 1 minute, 2 minute, 30-second, right? You work your way down from the highest to the lowest, greatest to the least, all right? Because the least, that's where you're going to catch those moves, right? And what I teach is to find the draw on liquidity for the day. And I'll make a video on draw on liquidity, right? I'll also make a video on my bias, how to determine that. But you're not always going to catch a crazy move. If you know where the market's going to go by determining with the higher time frames and time, you'll be able to take a trade in the direction of that draw on liquidity on a shorter, smaller time frame, right? Because you're not always going to catch that big move, but you might be able just to catch this little, retracement to like a 5 minute fair value gap. And then let's say price shops around and then goes up, right? But at least you'll be able to know where the market wants to go for the day, right? That's with daily bias. But with these time frames, right? Once you'll be able to see 5 minutes worth of price action on the 1 minute, right? So for the 1 minute, let's go to the 1 minute. See, look at all these candles, right? I'll show you. So the 1 minute, right? Let's just count 5 candles, right? So 1, 2, 3, 4, 5. That's going to be one candle right here on the 5 minute. That's one candle, right? Or this is the candle that's forming. It's one candle on the 5 minute, right? All right. Same thing on the 3 minute, right? Let's count 3 candles back. Right. 1, 2, 3, right? 3 candles back. It's going to form right there also, okay? So if you can't already tell, 15 1-minute candles is going to make up one 15-minute candle, and so on and so forth. 2 30-minute candles are going to make up one hourly candle. It's math, right? It's easy math. It's addition. It's all you really need, all right? But I just want you to understand the time frames. And the daily, right? This whole candle is 1 day of price action, right? This whole candle right here, this is 4 hours of price action, right? So I can show you, right? Let's just mark out the close and the open of this candle, right? And we can go down to the 1 minute and look at that. This is all the price action that happened in just this 4-hour candle right here, right? Crazy, right? So you're trying to trade with these higher time frame candles, right? So let's actually go back to this example and I'll show you. You're trying to find an entry. If you know the market's bullish, right? You're going to find an entry to trade with this 4-hour candle. You're trying to trade with it. And there is a beautiful, beautiful setup today, right? To trade with the higher time frame. So there is a model that you can use called AMD, Accumulation, Manipulation, Distribution, right? And you're trying to trade that 10 a.m. reversal with this candle, okay? So let's go to the lower time frame, right? You see we sweep out Asia lows, right? We're also going to get into this session times and all that. So we sweep out Asia lows and London lows, right? And if we know the market's bullish, we want to trade with the bullish 4-hour candle or the bullish 1-hour candle, right? So I'll show you the accumulation, we get the manipulation, and then we get the distribution, right? So that's sort of the AMD model. Let me show you real quick. Bullish example, accumulation, right? Actually, let me delete this. I could do one thing. Accumulation, right? Manipulation, and then we get that distribution. So this is a bullish example of AMD. Bullish AMD. This is a bearish AMD, right? Bearish AMD, right? Bearish AMD. AMD stands for accumulation, manipulation, distribution. So when you see something that looks like this, you'll know that the market's going to be good that day. All right, and we'll go way more into depth in future videos on this. All right, I'm kind of skipping around here. Just stay with me. All right, I promise this will all make sense in the end. So next, what we're going to talk about is session times. All right, so let me show you these session times. So as you can see, there is a lot of stuff going on, right? There's a lot of stuff going on here, okay? But let me show you the session times, all right? So we have 3 main sessions. Asia session, which is like Tokyo and Asia. We have London session, which is, UK. And then we have New York AM session, which is the US session when the US stock exchange opens, right, at 9:30, all right? But why do we need to know these time frames? Well, the lows, highs and lows from each session, from the Asia session and the London session, are very important, right? They're very good strong draws on liquidity. Strong draws on liquidity, you're going to hear me say this a bunch of times in this video, future videos, right? That is very important. Strong draws on liquidity. That's where you know the market could possibly reverse from, right? Like here, right? In London session, we took out Asia session high, right? And then we reversed off of it, right? Formed a downtrend. And then obviously we continue higher, but you could have caught a little entry on like a smaller time frame in this, right? So that's why it's very important, especially today, right? Look at New York AM, right? We took out Asia and London lows and we pushed in the opposite direction, right? We liquidity sweep, some inversion for value. Look, liquidity sweep, inversion for value gap, new trend. There you go. That's all you need, right? So let me talk about the session times, okay? So let's go to the indicator. Asia session is from 20 to midnight. So it's from 8 p.m. to midnight open, right? And then we got London's from 2 a.m. to 5 a.m. And then 9:30 to 11 is New York AM, New York lunch, and New York PM. You don't really need to know those. Just never trade New York lunch. New York lunch is very low volatility, and it's not good to trade, but it's from 12 to 3 or 12 to 1. And then New York PM's from 1:30 to, what is that? 4. 1:30 to 4. Okay? So these are the session times. Screenshot these, copy these if you need to. This is on TradingView, so I don't have this indicator on Top Step. So I already know because I've done so many countless back testing sessions. So that's pretty much it. But these are the session times, okay? So now let's get into your guys' homework, all right? Because we just did a lot and I might have to add to the homework. Okay. So the homework, understand each time frame, right? 15 minutes of price action is one 15-minute candle, right? Similar with all the other ones. And what they are used for, right? Lower time frames are for entries, higher time frames are for bias. Identify how the higher time frames move with the lower time frames and vice versa. So how the lower time frames make up the higher time frames, right? With a bunch of candles and form that 4-hour candle that either pushes bullish or bearish based on the bias, right? And I'm going to add find examples of AMD, accumulation, manipulation, distribution, right? AMD. And then we go, vice versa for a bearish example. And then lastly, mark out session times, right? We got Asia is 8 p.m. to midnight open. We got London is from 2 a.m. to 5 a.m. I used to trade London session, believe it or not, before school. It's kind of crazy. So yeah, and then we got New York lunch, or we can just do, or New York AM, which is from, you should all know this by the way, 9:30 a.m. to 11 a.m. Okay, and then the rest of them you don't really need right now. Okay, so this is your homework. Hopefully this video helped you with time and time frame alignment. All right. So yeah, this is day 5, Path to Profitability Bootcamp. Stay tuned for tomorrow. All right, we're gonna get into some more good stuff that you should know if you're going to become a profitable day trader. All right, so that's all for today's video. I will see you guys in the next one.